Today, I'm going to be talking about something that I tend to get kind of on a soapbox about, especially this time of year. I see a lot of questions pop up online and in different groups where boutique owners and really just a lot of business owners in general have questions about, if they're going to get a 1099 and where they're supposed to download it from and what it means and different things like that. And I don't know if today's episode is going to maybe ease your nerves about this topic or make it worse, but I'm going to say it anyway. You do not need your 1099K to do your taxes. And in fact, I'm going to even take that a step further and say that even if or once you get it, I don't even want you to use it. Did she just say that? Yes, I did. And I'm going to explain my reasoning to you in just a few minutes. So let's dive in. Hey there, and welcome to the Boutique Bookkeeper Show, where we take the mystery out of your money and make your numbers make sense. I'm Megan, virtual bookkeeper and bookkeeping coach, and I love helping female boutique owners just like you finally feel confident about the financial side of your business. If you're tired of feeling anxious every time you have to open QuickBooks, or if you're making sales but constantly left wondering, where did all that money go? You're in the right place. We'll cover all things bookkeeping and taxes, all in plain English, so you can be less intimidated by the numbers and finally start to use them to help you grow a profitable boutique. So, if you're ready to stop avoiding this whole numbers thing and start keeping more of the money you make, grab your coffee and your calculator and let's dive in. Hello and welcome to another episode of the Boutique Bookkeeper Show. I'm Megan, and today we are going to be talking about a topic that seems to be very popular this time of year, and that is a discussion around the tax document called a 1099K. We are going to talk about what this document is. I'm going to talk about why I don't really recommend that you really rely on it, and instead how you should be reporting your income when tax time comes around. So to start off, what exactly is a 1099K? So a 1099 is an informational tax document that businesses and individuals have to file to let the government know certain payments that were made. So there's lots of different types of 1099s out there. There's 1099 NEC, 1099 MISC, but for the purposes of this episode, we are specifically talking about a 1099K, which is the tax document that is issued by payment processors. So think of businesses such as, Shopify, they collect payments from your customers, PayPal, Sezzle, things like that. Those businesses are required to send businesses the tax document 1099K to report the payments that they have collected on behalf of those businesses. It's similar to a W-2 where a copy is going to be both sent to the IRS and to the business owner. And I'll say that not all business owners will get one, but these payment processors are required to send you one if you have received $20,000 or more in gross payments, and you've collected more than 200 transactions from any single payment processor. So that means that if you collect payments via Shopify, PayPal, Sezzle, and Venmo, each one of those would be required to send you a 1099K if you meet those thresholds. Otherwise, you're only going to receive ones where you meet those requirements. So a copy of this 1099K tax document is going to be sent both to you as the business owner and the IRS, and the deadline for them to get those sent out is January 31st of each year. And I'm just going to say this here too, it's worth noting that all income must be reported whether or not you receive a 1099K for it. So maybe you are still a smaller business and maybe you collected under the $20,000 threshold from multiple different payment processors. You may not get a 1099K, but that does not mean that you do not have to still report that income on your taxes. But a common mistake that I see business owners make is they wait to file their taxes either until they get that 1099K, or maybe they get it and they think that that is the number they have to use when they file their taxes. I mean, after all, that form is sent to the IRS. They know that number. They're going to make sure that your number matches that number, right? So I understand the reasoning for thinking that, but there are a number of things that are wrong with that line of thinking. And this is why I always say that I do not want you to rely on your 1099K. And honestly, I don't even really want you to use it once you get it in the mail. So the reasoning why you should not rely on your 1099K. Number one, it only reports the payments that are processed through that platform. So it's not going to include any cash that you received. If you have a brick and mortar and you accept cash payments, your 1099K isn't going to report that. It only reports the amount of payments collected via like credit or debit card that were swiped in your store. In those cases, you have a risk of underreporting your income because it's maybe also not going to include any payments processed through other platforms where you just didn't meet those thresholds. You're not going to get a 1099K for them. Another reason that I say not to trust your 1099K is it reports your gross payout amounts and not your sales revenue. So what do I mean by that? The gross payouts that you receive or the deposits that you receive from Shopify or Square or whatever payment platforms you use, those numbers are the sum of 6 different pieces of information. So you have your gross sales, which is like the full purchase price of the products that your customer is paid for. Sometimes there are discounts applied to that, which reduce that gross sale, the full purchase price. Sometimes you process refunds where money is paid back to your customers. If you are in a state that has sales tax, the money that you collect also includes the sales tax that you've charged to your customers. If you are an online boutique where you are shipping products, the money that you collect includes maybe some shipping income that you've charged to your customers. And then the payouts that you actually receive in your bank account, oftentimes processing fees have been deducted from those amounts, so that money never actually hits your accounts. So in an ideal world, all of those pieces of information are tracked separately. But the number that is reported on your 1099, it does not account for any refunds. So it only ever reports the money that you collect from customers. It doesn't subtract out any refunds that you sent back. And you are legally allowed to deduct any refunds from your gross sales when you file your taxes. The 1099 also includes the gross payout amount, which means it doesn't deduct out the fees that they withhold from those payouts. And you, again, are legally allowed to deduct any of the processing fees. That is a cost of doing business. You can use that to reduce your taxable income. And the third thing that is what I'll say wrong with the 1099 is it also includes any sales tax amounts that you have collected, but the sales tax that you collect is not your revenue, okay? It is the state's revenue. You are essentially just serving as the middleman between the state government and your customers, collecting that money from your customers, and then forwarding it on to the state when you do your sales tax returns. So if you are blindly trusting your 1099 amount and reporting that amount on your taxes, you are probably over-reporting your sales revenue, and you are going to be paying more in taxes than you need to because of those 3 things: the refunds, the processing fees, and the sales tax. So please don't just blindly trust and use the number that's reported on your 1099K. The IRS website itself says to use the form 1099K with other records to help you figure and report your taxable income when you file your tax return. I can even link to that exact page in the show notes if you don't just want to take my word for it, but I literally just read that off of one of the IRS pages talking about 1099Ks. So, what other records should you be using to try and figure out your taxable income when you file your tax return? You are going to use your own bookkeeping records to file your tax return. And to accurately record your revenue in said bookkeeping records, you're not just going to track the deposits that you receive as sales revenue, because again, it's going to include the sales tax, which isn't your revenue, and it's not going to help you account for the processing fees because those are deducted before the money ever hits your account. So to accurately account for all of the income in your business, you're going to break out and separately record those 6 different pieces of the payouts that we talked about just a minute ago: the gross sales, the discounts, the refunds, the sales tax, the shipping income, and the processing fees. If you use Shopify, which I know is one of the most popular options out there, and that's what most of our clients use, you can get almost all of these numbers off of one report, and that's called the Finances Summary Report in your Analytics section. This is the report that I swear by. We use it every month for all of our clients because the only number missing off of that report, of those 6 numbers, is the transaction fees, and you can get that from the different transaction and payout reports. So by using the finances summary report or whatever equivalent report your payment processor or your point of sale system may have, I know Square has like a sales summary report. Those are the two that I'm most familiar with. But by using the numbers that are reported on those reports and using those reports to add the accurate number into your bookkeeping records, when tax time comes, you can accurately account for the total sales revenue that you actually collected. You can claim all the refunds you paid out, all the sales tax you collected won't be grouped in with your income, and you'll be able to claim and deduct the processing fees that the payment processor charged you because you accounted for each of those items separately in your bookkeeping. Inside of Bookkeeping Made Simple, I walk you through exactly how to do this in your own bookkeeping, and it's super quick and easy to do. This is the method that we use for all of our clients as well, and it takes us only about 5 minutes to record an entire month's worth of sales data, and we know it's right because we're pulling it directly from our point of sale system and accounting for all of those pieces separately. So just a quick recap, a 1099-K is essentially a reference tool that may or may not be sent to you by all of the companies you use to help collect payments from your customers. Your tax return does not need to, and honestly it should not, report the exact number on your 1099-K. You should be using your own accurate bookkeeping records to help you file your taxes. So that's all that I have for you today, but be sure to tune in next week for another episode. I will see you there. Hey there, and thanks for hanging out with me today. I hope that I shared something that helped you feel just a little bit more confident in understanding all the numbers in your boutique business. If you found this helpful, don't forget to go and leave a rating and review on Apple Podcasts. That's the best way for other boutique owners just like you to find this podcast so I can help them feel just a little bit more confident in their numbers as well. If you have any questions about what you heard today, hop on over to Instagram and send me a DM at Finding Freedom Financial. I'll be back again real soon, but in the meantime, go implement or take action on something you learned today. I promise your future self will thank you.